The Federal Acquisition Regulation, better known as the FAR, is the rule book that governs every contract the federal government signs with a private business. It runs thousands of pages. It cross-references itself constantly. And every single solicitation you'll ever read incorporates dozens of FAR clauses by reference, often without writing them out, because the assumption is you already know what they say. For most small businesses, this is the part of federal contracting that feels the most intimidating, and there's a reason. The FAR really is dense and legalistic. But here's the practical truth. Out of those thousands of clauses, only a few dozen actually matter for the day-to-day life of a small business contractor. And among those, there's a smaller set, maybe 10 or 12, that are genuinely critical in the sense that misunderstanding them can cost you a contract, trigger an audit, or expose you to legal liability. What we're going to do is walk through those critical clauses grouped into 8 categories that match how they actually affect your business. Small business programs, payment and cash flow, contract performance, representations and certifications, ethics, cybersecurity, buy American rules, and disputes. You don't need to memorize FAR clause numbers. You need to understand what each one obligates you to do and what risks it creates if you ignore it. That's what this material delivers. Before we dive into specific clauses, I want to give you the mental map of the territory because the FAR is much easier to navigate when you understand it's organized around themes rather than as one undifferentiated wall of rules. The 8 categories on this slide reflect how the clauses actually impact a small business contractor's life. Small business program clauses determine whether you qualify for set-asides in the first place and what you have to do to keep that status. Payment and cash flow clauses control when and how you get paid. Get these wrong, and your invoices sit in limbo for months. Contract performance clauses define what counts as successfully delivering on the contract and what triggers default. Reps and certifications are the legal statements you make about your business when you bid, and getting them wrong has consequences ranging from disqualification to False Claims Act liability. Ethics and compliance clauses set the conduct standards expected of federal contractors. Cybersecurity clauses are the newest and fastest growing category, and they apply to small businesses just as much as to the primes. Buy American clauses restrict where your goods can come from, and disputes and legal clauses define your rights when something goes wrong. The pattern across all 8 is the same. The FAR doesn't trust you to do the right thing. It requires you to document that you did. We'll keep coming back to that. Let's start with the small business program clauses because if you're listening to this material, these are the ones that gave you a way into the federal market in the first place. The 2 big ones to know are FAR 5 2.219-6 and FAR 5 2.219-14. FAR 5 2.219-6 is the Notice of Total Small Business Set Aside. When you see this clause in a solicitation, it means the procurement is restricted to small businesses only. Large businesses cannot compete. The catch is that small is defined by the NAICS code listed in the solicitation, and you have to meet the size standard for that specific code. If you misclassify your NAICS code or you exceed the size standard and certify as small anyway, you can be disqualified immediately and in serious cases face fraud charges. Don't guess on size. Verify against the SBA's size standards table before every bid. FAR 52.219-14 is the limitations on subcontracting clause, and this is the one that catches more first-time set-aside winners off guard than almost any other. When you win a small business set-aside, you can't just turn around and subcontract the whole thing to someone else. For service contracts, you have to self-perform at least 50% of the labor cost yourself. For supply contracts, there are similar limits on how much you can outsource. The whole point of the set-aside is that small businesses benefit from the work. If you're essentially a pass-through to a larger firm, that violates the program. Get this wrong, and the government can terminate your contract for default. Here's a piece of FAR 52.219 that catches almost every small business off guard at some point: re-representation. The clause to know is FAR 5 2.219-28, post-award small business program re-representation. The simple version is this: your small business status is not permanent for the life of every contract. When certain triggering events happen, you are legally required to formally update to re-represent your size and program status with the contracting agency. What triggers it? 3 main scenarios. First, mergers or acquisitions. If your business is acquired by a larger company, you have to re-represent immediately, regardless of where the contract stands. Second, novations, which is the legal term for when a contract is assigned to a new entity. the successor entity has to re-represent. And third, long contract performance periods. On multi-year contracts, the government can require periodic re-representation at certain anniversaries to confirm you still meet the size standard. The risk if you get this wrong is significant. Failing to re-represent or doing it inaccurately can jeopardize your contract eligibility, trigger an audit, and in worst-case scenarios expose you to False Claims Act liability, which carries treble damages and even criminal exposure. The action item here is simple, but easy to forget. Anytime your business goes through a corporate event, review every active contract and check the re-representation requirements. The windows are time-sensitive. Now let's talk about getting paid, because that's why you're doing this work. The first clause to understand is FAR 52.232-33, which mandates payment by electronic funds transfer. There are no paper checks in federal contracting. Every payment flows electronically based on the banking information you've entered into your SamGov registration. The implication is that if your SAM banking details are wrong, outdated, or incomplete, the government literally cannot pay you, and your invoice sits in limbo until you fix it. The action item is to verify your SAM banking details before every contract award, and especially after any change in your business. New bank, new account, anything. The second clause worth understanding is FAR 52.232-40, the Accelerated Payments to Small Business Subcontractors clause. This one applies when you're the prime contractor and you're subcontracting parts of the work to other small businesses. The clause may require you to pass accelerated payment terms downstream, meaning when you get paid quickly, your small business subs get paid quickly too. The intent is to keep cash flowing through the small business supply chain instead of larger primes sitting on payments. If you're going to be a prime contractor, build this into your subcontracting agreements from day one. Aside from being a compliance issue, it's also a relationship issue. Small business subs talk to each other, and the primes who pay fast get the best teaming opportunities going forward. Two more payment clauses round out this category, and they're worth understanding before you submit your first invoice. FAR 52.232-1 is the basic payments clause. It defines when payment is actually due after you submit a proper invoice, what the invoice has to look like, and what triggers the payment clock to start. The phrase proper invoice is doing a lot of work here. If your invoice is missing required information, the clock doesn't start and you don't get paid on time. Read this clause carefully before you submit your first invoice because the formatting requirements are specific and unforgiving. The second clause is FAR 52.212-4, the Contract Terms and Conditions, Commercial Products and Commercial Services clause. This is one of the most comprehensive single clauses in the entire FAR. It covers payment, inspection, acceptance, disputes, termination, and changes, all in one place. If your contract is for a commercial item, which most small business contracts are, this clause is going to be there and it's going to govern most of the major moving parts. The thing to understand is that 52.212-4 isn't a single topic. It's effectively a one-stop reference for how a commercial contract operates. Every section of it can be triggered independently, so a single dispute can activate the payment provisions, the inspection provisions, and the changes provisions simultaneously. If you only read one clause in your entire commercial contract, read this one, and read it slowly. Contract performance is where a lot of first-time contractors lose money or lose contracts, and the two clauses in this category explain why. FAR 52.246-2 is the Inspection of Supplies clause for fixed-price contracts. It gives the government the right to inspect what you deliver before they formally accept it. Here's the subtle but critical point. Acceptance is not necessarily final. If defects are discovered after acceptance, what's called a latent defect, or if there's been fraud, the government can come back later and revoke the acceptance. So even after you've delivered and gotten signed off, you remain on the hook for quality. The practical implication is that you need a real quality control plan and contemporaneous documentation of every quality check. Don't assume the government's sign-off ends your obligation. FAR 52.249-8 is the default termination clause for fixed-price supply and service contracts, and this is the one that ends federal contracting careers. The government can terminate you for default if you fail to deliver on time, fail to make progress, or otherwise materially fail to perform. The consequences are severe. They can reprocure the work from another vendor and charge the cost difference to you. your past performance record takes a major hit, and your ability to win future contracts is damaged. There are legitimate defenses, acts of God, government-caused delays, supplier failures, but you have to document them in real time. The pattern across both clauses is the same. Communicate proactively, document everything, and never go silent on a problem. I want to spend extra time on this one because the changes clause, FAR 52.243-1, is simultaneously the most powerful protection you have as a contractor and the most commonly fumbled. Here's the deal. The government has the unilateral right to change your contract during performance. They can change the scope, change the specifications, change the delivery schedule. You don't get to refuse, but in exchange for that government authority, you get a corresponding right. The right to be compensated for the impact of those changes. If a change increases your cost, you can claim a price adjustment. If a change pushes your timeline, you can claim a schedule adjustment. Sounds straightforward. Here's where contractors get burned. You have to document the change direction immediately in writing with date and scope and impact assessment. If a contracting officer or COR verbally directs a change and you just do it without documenting, you may have lost your right to compensation even if the change was real. The whole life cycle is roughly: government issues a change direction, you immediately create a contemporaneous record, you submit a formal request for equitable adjustment with the cost and schedule impact, and then you negotiate with the contracting officer to a formal modification. If you skip the contemporaneous documentation step, the rest of the process falls apart. The single most valuable habit you can build as a federal contractor is keeping a running written log of every direction you receive from the government, dated and detailed. That habit pays for itself many times over. We've talked about SAMGov throughout this course, and these two FAR clauses are why it matters as much as it does. FAR 52.204-8 is the Annual Representations and Certifications Clause. It ties your contract directly to the certifications you make in SAM. Gov, your business size, your ownership structure, your legal compliance declarations, all of it. These have to be renewed annually as part of your SAM registration. If your certifications go stale, you may have to renew before the government can act on your offer. FAR 52.204-13 is the SAM Maintenance Clause, and it imposes an ongoing requirement. Your SAM registration must remain active and accurate throughout the entire contract performance period, not just at the time of award, the whole time. If your SAM registration expires while you're performing the contract, payments stop. New awards become impossible. And in worst cases, your existing contract eligibility comes into question. The single most preventable mistake in small business federal contracting is letting SAM expire. Registration is valid for exactly 365 days from activation, with no grace period. Set a calendar reminder for 60 days before expiration. Set another for 30 days. Renew early during peak federal fiscal periods because processing times spike at the end of the fiscal year. And update your banking information immediately when it changes because EFT payments depend on it being current. Treat your SAM registration the way you treat your business license, a living, maintained record, not a one-time event. Two ethics clauses you should know. FAR 52.203-13 is the Contractor Code of Business Ethics and Conduct Clause on larger contracts, typically over $5 million or with extended performance periods. It requires you to have a written ethics compliance program, internal controls, and mandatory disclosure obligations to the government if you discover certain types of misconduct, even when it's not technically required for your contract size. Adopting a written ethics policy and basic compliance training is a smart practice that signals professionalism and protects you in audits. The second clause is FAR 52.203-19, the Prohibition on Internal Confidentiality Agreements clause. This one is much broader. It applies to all contract sizes, no threshold. Here's what it does. It prohibits federal contractors from requiring employees or subcontractors to sign internal confidentiality agreements, NDAs, settlement agreements, anything that would prevent them from reporting fraud, waste, or abuse to the government. Federal whistleblower protections are non-negotiable. If you have NDAs in place that include broad confidentiality language, review them with an attorney to make sure they don't inadvertently suppress whistleblower rights. The bigger picture across both clauses is that the government takes contractor ethics seriously, and the burden is on you to demonstrate compliance, not on them to prove a violation. A small investment in a written ethics policy and clean employee agreements protects you against a category of problems that's expensive to fix retroactively. Cybersecurity is the fastest evolving area of federal contracting compliance, and it's no longer something only the big defense primes worry about. Two clauses to understand. FAR 5 2.204-21 is the basic safeguarding of covered contractor information systems clause. It applies anytime you process, store, or transmit federal contract information on your computers, which is essentially every contractor doing any meaningful work. It requires 15 specific safeguarding requirements: access controls, password protections, software patching, secure system configurations. None of these are technically complex, but you have to actually do them and be able to demonstrate you did them if asked. Even small contractors with basic IT setups have to comply. FAR 5 2.204-25 is the prohibition on certain telecommunications and video surveillance equipment clause. It bans the use of equipment or services from designated companies, Huawei, ZTE, Hikvision, Dahua, and a few others, in the performance of federal contracts. The catch is that the prohibition extends to your entire supply chain, not just direct purchases. Contractors are often surprised to learn they have a banned component in their network because they bought a router from a reseller who didn't disclose the underlying vendor. Audit your IT vendors. Ask your suppliers to certify they don't include banned components. The penalties for being caught with prohibited equipment are severe: termination, debarment, and potentially serious legal exposure. Cybersecurity compliance has shifted from optional to baseline. Build it into your operations before you bid on a contract that requires it. Buy American rules are some of the most politically charged clauses in federal contracting, and they've gotten more aggressive in recent years. Two to know. FAR 5 2.225-1 is the basic Buy American clause for supplies. When it applies, the end products you deliver have to be manufactured substantially in the United States with a threshold percentage of domestic components. The exact threshold has changed over time, and current rules require verification before sourcing. These percentages have been steadily increasing as policy shifts towards stronger domestic preference. If you're a reseller or you source from overseas suppliers, this clause has serious implications for your supply chain. You need to confirm Buy American compliance before contract award, not after. FAR 52.225-13 is the restrictions on certain foreign purchases clause. This one is broader. It prohibits purchases from countries that are subject to U.S. sanctions or specific executive orders. The list of restricted countries changes based on geopolitical developments, so you can't set it and forget it. You have to actively screen your vendors and confirm country of origin before contract execution. Violations of Buy American and foreign restriction clauses carry some of the heaviest penalties in federal contracting: contract termination, debarment, and potential civil and criminal liability. The action item if you're in supply or manufacturing is to audit your supply chain before bidding on any supply contract. Know where your components actually come from, not just where you buy them from. The middlemen don't shield you from the compliance obligation. Things will go wrong in federal contracts, and these final two clauses define how you protect yourself when they do. FAR 5 2.233-1 is the Disputes Clause, which incorporates the Contract Disputes Act. It defines the official process when a conflict arises between you and the agency: a billing dispute, a scope disagreement, an interpretation of contract terms. There's a formal process for filing a claim. Claims have to be properly certified and submitted in writing. There are timelines, there are levels of appeal, and the single most important rule in this entire area is that if it wasn't documented contemporaneously, it didn't happen. Logs, correspondence, change notices, meeting minutes, these are your legal protection. Build the habit of documenting everything in writing, dated, sent or filed in real time. After the dispute starts, it's too late to create the documentation. FAR 5 2.233-3 covers protests after award, which is the process you use if you believe a contract was awarded improperly to a competitor who shouldn't have qualified or in violation of procurement rules. Protests have very short deadlines, typically 10 days from when you receive the award notice. Miss the window and you lose the right to protest, period. Protests can be filed at the agency level, with the GAO, or with the Court of Federal Claims. Each forum has different rules and strategic considerations. If you think you have grounds for a protest, talk to a procurement attorney immediately. The clock is brutal and the procedures are unforgiving. Let's pull this all together. Across the FAR's thousands of pages, here are the 10 clauses that matter most for a small business contractor's daily reality. Critical tier, These can end your contract or end your business if you get them wrong. FAR 52.219-14, comma, limitations on subcontracting. Don't subcontract more than allowed on your set aside. FAR 52.243-1, comma, the changes clause. Document every change direction in real time. FAR 52.219-6, comma, set aside eligibility. Verify your size status before every bid. FAR 52.204-8, comma, SAM certifications. Keep them current. FAR 52.204-21, comma, basic cybersecurity safeguarding. Implement and document. Important tier. These create real risk if neglected. FAR 52.204-25, comma, telecom prohibition. Audit your supply chain for banned components. FAR 52.232-33, comma, EFT payments. Keep your SAM banking details accurate. FAR 52.212-4, comma, commercial terms. Understand every topic it governs. Emerging tier. These are growing in enforcement and importance. FAR 52.203-13, comma, ethics code. Adopt a written program, even if not technically required. FAR 52.249-8, comma, the default clause. Communicate proactively to avoid termination. Keep this list close. Print it, tape it to your wall if you have to. The FR has 1,000 other clauses, but if you internalize these 10, you've covered the vast majority of the risk surface you'll actually encounter as a small business contractor. Federal contracting rewards preparation. You now have the map of what to prepare for.